In the US, because of monetary intervention, artificially low interest rates, and saving has basically been decimated, capital is flooding into a lot of these tech companies. It's flooding into a lot of small cap companies. And when you look at, say, the Russell 2000, that's 2,000 of the small cap companies in the US, 40% of them are zombie companies, which basically means that 40% do not earn enough capital to be able to service their debt payments, which effectively means that this capital is flooding into companies that are incredibly unproductive, and it's just decimating capital that could go towards research and development.
Hello, everybody. Welcome to a new episode of Bitcoin Equity Talks. Today, I have the honor to have with me Seb Bunney, who is the author of The Real Cost of Money, bestseller in the Bitcoin field, and the co-founder of Looking Glass, an online educational program. Thanks for joining the show, Seb.
Honestly, it's truly my pleasure. I think when it comes to the financial space and the Bitcoin space, everyone I meet is phenomenal. And so I'm really looking forward to our conversation.
Good. The first question I would ask you is, what's your Bitcoin journey?
Boy, that's a big question. You know what? It's interesting. A lot of people in the Bitcoin space talk about how our Bitcoin journey started before Bitcoin even came to be. And so Bitcoin obviously came to be in 2009, but there was a few key moments that I would say even as a child that kind of highlighted that money is incredibly important. And so I'll touch on kind of two to three of them quickly because it'll make more sense. So the first one, I was raised by a single parent. I was raised by my mum. And what I realized very early on was if our monetary environment wasn't favorable, if it was a challenging monetary environment, my mum had to go and work more. More and more of her time was consumed by working, which meant she had less time to be able to spend meeting our emotional needs for my two brothers and I. And so, kind of, this is the first point. I'm starting to realize, money is shaping how our parents are showing up. And then the second point was my dad, when I was about 9 years old, I remember going into this toy store and seeing this scooter. And I wanted this scooter so badly. And I ended up saving for about 3 months for the scooter. We went back to go buy the scooter. And my dad was like, you know what? I feel bad that you're getting a scooter and your two brothers aren't. So I'm going to buy them a scooter, but you got to pay for yours. And so I ended up, I was just devastated. I'd saved for months. I put all my time and energy into getting the scooter. And all of a sudden, my brothers got one with no effort. And this reminds me of in the monetary environment, there's something called the Cantillon effect, which is those closest to the monetary spigot benefit disproportionately. We have a system that is advantageous to certain individuals and less so for others. And so this started to get me questioning, things seem unfair. And then finally, for a long time, for over a decade, I was a mountain bike instructor. I used to teach in the kind of the hills and the mountains of Canada, and I absolutely loved it. But what I realized very early on was a lot of my idols, a lot of these professional athletes that are on the world stage were struggling financially. They were up to their neck in debt. They were renting their place. They didn't really know what the future looked like. And it made me question, if I want to pursue a life that I want to live, I have to have passive income streams. I have to look to invest to be able to get by because a standard job may not cut it. And so that made me start looking into the financial markets. It made me start looking into our monetary environment. And so it started with real estate. And then from real estate, it went into trading futures and then trading options through kind of a value strategy. And then I quickly realized that I'm looking at the world assuming we have a free market. I'm taking these positions assuming we have a free market. And then all of a sudden, we see Federal Reserve intervention, central bank intervention, interest rates cuts, interest rate hikes, and my positions aren't going as expected. And that makes me start to wonder, like, if we don't have a free market, what do we have? And so then I started digging behind the veil. I started to dig behind the curtain, and I started to realize that our monetary environment profoundly shapes who we are. It shapes how we grow up, whether our parents are able to support our emotional needs. It shapes if we're able to pursue the things we want to be able to enjoy. It shapes whether we can even express ourselves monetarily where we want to, or whether there's monetary restrictions that impede us from doing so. And so ultimately, all of this, to answer your question, led me to where I am now. I started to realize that if we can change our monetary environment, then I believe we can resolve a lot of the challenges that we face in society, which arguably I would say stem from a monetary system that doesn't meet the needs of its users.
Yeah, you tackle the Bitcoin solution in a very interesting way in your book, where you start by showcasing the problems of our monetary environment. And I mean, everything you just said, if you had said it before Bitcoin was invented, they would have called you a communist, like you want the state to control everything and equal pay for everyone, etc. And it only takes Bitcoin to give you like an alternative vision to be able to look at this current monetary system that allows you to see or to imagine what could be a Bitcoin standard, what could be a capped monetary policy, what could be, and then you go and challenge the existing part of it. One thing that always that really struck me when I started digging down this rabbit hole, I mean, most investors that I've did my career in the financial markets, so I've been like chasing returns all my life and seeing people chasing returns all their lives, and I came to the conclusion even before Bitcoin that it's a big casino, like that we're all running behind these returns, and people like if you look at any stock like Apple stock, I'm sure like you have thousands, if not millions, of people holding this share without even knowing how to read a balance sheet or an income statement, and everybody becomes a casino player basically because they want to beat the monetary creation that is impoverishing them. Everybody becomes a real estate builder, buyer, refurbisher, renter, whatever, because if you keep your money in the bank, it's going to lose value. And they do it like thinking they're making money without realizing that they're just maintaining their standards of living.
No, and you bring up such a good point, which is the fact that our monetary environment shapes who we are and how we act. And so people who are listening to this have probably heard that money is meant to serve three functions. It's meant to be a store of value, a medium of exchange, and a unit of account. Let's forget about the second two for a second and focus on the first one, a store of value. Money is meant to be able to store our value because when we invest time and energy into work, we are remunerated in pay. We're remunerated in our wages. Naturally, if I've invested time and energy, I want to be certain that in the future, when I go to expend that money that I have earned, that it is worth the same amount that or more for when I actually expended that time and energy. But the challenge that we face today is that if I go and spend a ton of time at work and I get paid $100, if I go and spend it in a few years' time, it may only purchase $50 worth of goods. And it's almost as if my battery that is our money is being depleted. And so the reality is that because our money no longer acts as a store of value, it's not like people are just going to go and spend. Yes, a lot of people do, especially the lower class and the middle class that maybe are not as conscious of what is going on. But a lot of the upper middle class and the upper class go and invest in assets. So all of a sudden, people are using things like real estate, people are using farmland, they're going and using equities as their store of value. They're no longer using them for their utility. So all of a sudden, we're seeing a lot of properties being taken off the market. They're no longer being rented because people are simply using them as a store of value. Where I live in Whistler, in the ski resort of Whistler, 61% of houses are empty. And that's because a lot of wealthy individuals are trying to store capital. They're not going to store it in the currency. And it's the same thing with even farmland. We're seeing people globally buying up farmland left, right, and center, but they're not going and using that farm for its productive capacity, which is to grow crops, to be able to raise livestock. Instead, they're using that farmland as a store of value just to hold capital because they know that it's going to outperform the currency. And so the challenge that we face is that our monetary environment, to your point, is incentivizing us to try and take risk. It's incentivizing us to invest because saving is it's not going to do anything. It's going to make life a hell of a lot harder. And that's where I truly believe that it doesn't have to be that way. We know that naturally people since the dawn of time have always been striving to get more for less. We've always been trying to improve productivity, create tools that help increase efficiency. And so the analogy that I like to give is you look at like Blockbuster versus Netflix. Blockbuster, you used to have to drive all the way down to Blockbuster, spend 30 minutes in Blockbuster deciding which movie you want to rent. Then you spend your $10 renting the movie. You drive all the way home, watch the movie, drive back again, drop off the movie, drive back home again. All of that time and energy to watch one movie. And now with Netflix, you're able to spend the same amount as one movie and you've got millions at your fingertips. So naturally, productivity and technological advancement is allowing prices to fall, but we don't realize that because unfortunately, monetary intervention and the inflation is basically masking a lot of this advancement. And that's where something like Bitcoin, when you have a fixed supply, it potentially fixes this issue. But more on that in a second.
Yeah, I hear you on this point. I wanted to challenge you a little bit on this
Yeah,
vision. If you think about it, you can say that before Bitcoin, the Bitcoin of the world was gold, and even before that, even if you don't like gold, you can say it's the S&P 500. So you just buy the S&P, and this is what Warren Buffett has been predicating for ages. So you had a monetary system that is the S&P, which was not convenient for day-to-day purchases, but it was a good store of value. Why do we need a new monetary system since we have one which is the S&P that is working very well?
I would say that naturally, the challenge is there's a difference between investment and saving. Investment involves risk. You are taking risk in order to try and get outsized returns. But the challenge is that in our current monetary environment, saving is effectively useless because of the rate of inflation in most countries. During, what is it, 2020, over half of all inflation reporting countries globally reported double digit inflation, which means if we're averaging 10% inflation, that means that over 10 years we're losing 60% of our purchasing power. So saving is effectively useless in such an environment. So what it does is actually forces us into investments. And the problem with that is if we're being forced into investing, then a lot of capital is going to go towards maybe endeavors that are not necessarily the most productive. And so we see this happening. In the US, because of monetary intervention, artificially low interest rates, and saving is basically being decimated, capital is flooding into a lot of these tech companies. It's flooding into a lot of small cap companies. And when you look at, say, the Russell 2000, and then for those that are not familiar, that's 2,000 of the small cap companies in the US, 40% of them are zombie companies, which basically means that 40% do not earn enough capital to be able to service their debt payments, which effectively means that this capital is flooding into companies that are incredibly unproductive, and it's just decimating capital that could go towards research and development. It could go towards moving the economy forwards. And so I think that the challenge is as we start to see a monetary environment degrade and we're forced to invest, we see a lot of unproductive capital. People should be able to save in the currency, because if they're able to save in the currency, they will only invest when value is promoted, when a company is truly offering value, which aligns with more of a free market approach. It is that naturally capital is going to flow towards whoever's offering value. Whereas in a market where you're no longer incentivized to save, capital flows towards anything. And that's the challenge that we face today.
Okay, but don't you think, I don't know, when Christopher Columbus discovered America, there were like some zombie boats, and it's just like a repeat of human endeavor of trying stuff, and it's not necessarily more now than it was in the past?
I think that when you look at the correlation between monetary intervention and zombie companies, there's a pretty strong correlation in that the more we intervene monetarily, the more we start to see these byproducts. And so naturally, like a perfect example would be in a let's just say a normalized interest rate environment where interest rates were not necessarily fixed or governed by the central bank. Ultimately what ends up happening is interest rates will always be above inflation, because if you have capital, if you have cash in the bank, why would you ever lend to be paid back less? And so you would demand inflation plus the risk premium for the event that the person you lend your money to defaulted on the loan. The reality is that we face financial repression today. Financial repression is when central banks hold interest rates below that of inflation. So ultimately, we're being forced to lend our money and to be paid back less based upon kind of the debasement of currency through inflation. And what this ends up doing is this pushes us into other forms of investment. It pushes us into other areas of the economy. And I think that the challenge at which we face is that it's massively disadvantageous to savers and massively advantageous to debtors, which makes sense given that the central bank, the government, tends to be the biggest debtor in any nation. But the challenge with that is it's incentivizing debt consumption, because if you can borrow and pay back less, then naturally we're going to take on debt. But debt isn't always productive. Just because we borrow, that doesn't mean that it is productive. The challenge is, I think, if we had a natural interest rate environment which was allowed to fluctuate based on risk in the economy, naturally what we would find is that over time, people would be taking less risk because they would only take risk in the event that they believed that that money had a payout above and beyond the risk at which they were taking. Today, that's not the case. People are taking risks simply because they're actually incentivized to do so.
Okay, and this is like a very Western developed world type of situation. How do you look at it from the underdeveloped part? Like I'm French and Lebanese, and everything you say, I see it in France.
Yeah.
But in Lebanon, it's like a complete different story because people are not looking to save; they're looking to live paycheck to paycheck, and they have like struggling with daily issues. So, is there any deconstruction, I would say, of your mind worldwide view of the monetary system when it comes to developed countries versus underdeveloped countries?
When I think the challenge that we face is that our monetary system, again, to the point we made at the start, shapes who we are and how we show up. And I'll step back for a second and I'll describe something which will make a little more sense, which is our monetary environment shapes our behavior. And there's 3 points that I tend to touch on. The first one is what is called time preference. And so if we have a low time preference, we tend to think about the future. We tend to think about building security, building stability. If we have a high time preference, we tend to think about impulsive needs, the present moment, meeting whatever it is in the here and now. When we have a monetary environment whereby our money is losing value over time, we're incentivized to be impulsive and spend in the moment and to consume because our purchasing power is greatest in this present moment. A lot of this is unconscious, it's not necessarily conscious. And so, our current monetary environment, the greater amounts of inflation we have, the greater short term thinking we also have. The second one is meaninglessness. The challenge that we face right now is we have rampant inflation in many countries globally, especially in the developing countries. And because we have a lot of this rampant inflation, it means that it's very hard to predict what the future is going to look like. It's very hard for a working class individual, a family, to be able to save to purchase a house, to be able to build some security when they don't know what the price of that house is going to be in 6 months' time, in a year, in 5 years' time. And so it's very easy for meaninglessness to set in. And then finally, it's kind of compassion and altruism. And you and I were talking about this just before we hit record. But in psychology, there's something called Maslow's hierarchy of needs. And that is a 5-tier pyramid. And at the base of that pyramid, you need to meet your security needs, food and shelter, before you can start to look at relationships or self-actualization or spiritual growth. And so the reality is that our monetary environment, because our money is degrading, our money is losing purchasing power over time, it's increasingly pressuring us to focus on meeting our immediate needs. It's increasingly pressuring us to, how am I going to put a roof over my head and to be able to feed my family? And so this is giving us less potential to give back, to be able to collaborate, to be able to be more altruistic and compassionate. And so the challenge that we face in a lot of these developing countries is that because they're facing much higher rates of inflation, a lot of them are simply trying to survive. They're simply trying to meet their immediate needs, and it's very hard for them to be able to think to the future. And then the challenge that we face is on an even bigger macro scale, and I only touched on this briefly, is that we then have a bunch of these unelected organizations, whether it's the IMF or the World Bank, that are then coming in, and they're supposedly trying to help support these countries, but many times it does the inverse. There was a story that I heard a few years back that was interesting. It was something like Nike, like the shoe brand, they wanted to support one of the African nations. And so they ended up giving them something like 2 million pairs of shoes. And ultimately, it sounds like, man, we're giving back. We're supporting these little communities. But what it actually did was all of a sudden, all of these communities started to have Nike shoes. They had shoes before. They just may not have had high quality Western shoes. But because all of these individuals suddenly had shoes, all the shoemakers went out of business because they didn't have the demand for new shoes. So then by the time those shoes had worn out a year later, they couldn't get shoes. There was nowhere to find shoes. And so the challenge is, I think when we try to intervene monetarily, when we try to support others, ultimately, it's very hard for us to predict the second and third order effects of our actions, which is, I think, what many of us, central banking, you name it, are trying to do. We're trying to intervene with the best intentions to try and stop the economy from blowing up, to try and impede the housing market collapse. But ultimately, we end up incentivizing certain behavior, which leads to a whole host of other issues down the line.
Wow, I like how you deconstruct everything starting from the monetary angle, basically. And I mean, money is what makes the world go round. So it's not like something they say because it's people don't care about it. So it is very important, but I never thought about like how far down the line it can impact everything. So which makes me think about like if you go like in the theory behind everything that you're saying, it brings us back to the Keynesian theory of monetary policy versus the Austrian school
Hmm.
and all the 100 years old discussions and debates that went around back then. And then I mean, they say that Keynes was the reference or the one that was the most convincing in his theory compared to the others. I'm not sure we followed Keynes because Keynes came up with a theory where there was the Bretton Woods afterward. There was a gold-backed currencies, but then the gold disappeared, and now we have like thin air printed currencies. So if you go back like 100 years, like this school of thought was there. Why didn't it pick up? How do you explain that only now, thanks to Bitcoin, we're having like this
Hmm.
discussion?
So when we actually look at how an economy functions, there are kind of four levers in the economy. There is land, that is all of our natural resources. So that is the lumber, that is the minerals in the ground, the water, you name it. There is labor, that is our individual capacity to be able to add value, to be able to work hard, to be able to join forces. There is capital, that is obviously the money that allows us to be able to strive towards creating value, putting businesses together, stimulating the economy. And then finally, there is enterprise, and that is combining land, labor, and capital to be able to create ingenuity and technological advancement. Now, the challenge we face is that out of these four levers, three of them are indirect and one of them is direct. What do I mean by that? What I mean is that if we want to try and make change through the land lever, we have to be able to go and find resources. We have to hope that we can go and find gold. That takes a lot of time and energy, and there's no potential certainty that we're going to have that payout, that we're actually going to go and find gold. And the reality is that we've scoured the earth for all of our major resource sites globally. So it's not as if we're going to stumble upon some massive multi-trillion dollar gold reserve that maybe we hadn't seen previously. It's going to be very low probability. So then the next one, labor. Well, if we want to improve our labor capacity in the economy, we've got to lower our average age of our worker. That helps improve efficiency. That helps improve the workforce. But again, the challenge is we've been told for so long that we've got overpopulation. So people are having less and less kids. When you look at China, China up until 2050 is meant to see their population half. When you're looking at the US has basically last year had the lowest growth rate in the last 100 years. Canada, the same thing. They're meant to see a 60% growth in people 60 and above, with only a 10% growth in people 60 and below. And so what you realize is that, well, that lever doesn't really work either. We've got an aging workforce and it's becoming harder and harder to increase productive capacity. Well, what about the enterprise lever? The same thing. We can try and bet on technological advancement, AI, robotics, you name it, but there's no certainty of when this is going to pay out and when this is going to massively increase efficiency, which leaves us with one lever, and that is the monetary lever. The monetary lever is the only lever which we can directly create change in the economy by stimulating the economy, and we will see immediate effects. But the challenge is the more we pull on that lever, the less impact it has. And so it's interesting. There's a graph by Lacey Hunt, and for those who are not familiar, he's a phenomenal bond trader and looks at kind of macroeconomics and how economies function. And he looks at how much does $1 of debt impact GDP. And 10 years ago, $1 of debt impacted GDP by, I believe, and this is in the US, by about 42 cents. Today, it impacts GDP by something like 33 or 34 cents. So, what you start to realize is that within a 10-year period, because we've been pulling the monetary lever so quickly and so frequently, the impact of that debt is doing less and less and less. And it gets to a tipping point whereby actually, by taking on more debt, you actually impact the economy even further because of the debt service payments. So what we're realizing is that through over time, the way that our economy functions has incentivized monetary intervention, given that money is the quickest way to stimulate change in the economy. But the challenge with that is that we have also seen the centralization of our monetary system. The centralization of our monetary system has distorted how we see the world. It has distorted certain behaviors. And I'll just quickly touch on kind of one way that I view money, which will hopefully make sense, which is the way that I view money is like language. Money is a form of expression. It's a medium of expression. It's how we express to the world what it is that we value. If you go into a grocery store and you see someone buying grass-fed meat and organic vegetables, and then another person buying microwave meals, candy, and cigarettes, you can tell what it is that they value by what it is that they're purchasing. Now, the challenge is, like language, money can also be censored. And that basically means that we can be impeded in our ability to spend our money where we see fit through financial restrictions. We get capital controls in China. If you want to go and invest abroad, it is almost impossible to do so. That locks capital in the borders, and that allows the government to be able to intervene, devalue the currency so they can continue funding operations. On top of that, you've also got inflation. Inflation is a form of censorship because it is taking our purchasing power and the government is spending it elsewhere in the economy where we may not necessarily spend our capital. And so the challenge is, let's say I do not support war. I believe that I want a nice, peaceful world. So I'm never going to spend my money where I believe goes towards supporting war. Well, if the government debases the currency, devalues the currency, and then goes and supports war with my purchasing power, ultimately, it actually doesn't matter what I support or what I care about. My purchasing power is being shown to be supporting war. And so the challenge that we face today is that because of monetary intervention, because of a distortion in capital flows, we are not necessarily being able to determine what it is that society values. We're not able to express ourselves monetarily. And because of that, it impacts the business market, it impacts the free market. Because if I'm trying to start a business and I don't know what companies should exist and what companies shouldn't exist because of monetary intervention, I don't know where capital would naturally flow in the economy, I don't actually know what it is that society values. And that makes life very hard for both the individual trying to start a business, but it also makes life very hard for central planners trying to plan for the future because they have no idea what it is that society values. We've got very distorted views because of money. That's kind of a long-winded answer to your question.
Yeah, I mean, wow, you touched on so many things. I like how you put it, like in a very neat and clear way, at the same time explaining the root problem of what Bitcoin solves, basically, and how our system is distorted. What about politicians in general? I mean, what I have observed also is as this monetary looseness, I would say, or debasement grows, you see more and more the government-backed entities getting bigger and bigger, and basically this debasement of our purchasing power is going in their pockets and in pockets, useless pockets like zombie companies, and financing wars and stupid spending and stuff like that. Did you have the look at the politics behind it?
Absolutely. And this is such an important point, which is the fact that in a free market, capital only flows to those that are creating value. If I was to start a business in a free market and my product or my service is something that the society does not want, then no capital will flow towards me. And that forces me to rethink, okay, how do I want to show up in this world so that I can receive capital to be able to support my family? The reality is that when the government has a monetary printer, it no longer has to think about offering value because it can fund operations at the expense of the currency holders, regardless of whether or not they have support. And so what that means is that over time, the government has slowly expanded. Take the US or Canada, for example. The average public sector job pays 10% more than the average private sector job because they don't have to worry about balancing their books. They don't have to worry about being fiscally responsible because they have a money printer. That is not
And
possible.
it's done 10 times worse.
Absolutely. And so what ends up happening is because the average public sector job pays more than the private sector job, you see the public sector slowly engulfing the private sector. And there's a chart in the book, The Hidden Cost of Money, where it shows this. It shows that over time, we've seen immense growth in public sector jobs. Not only that, we've also seen immense growth in administrator jobs, just because we're seeing greater and greater regulation. As we see more intervention, we see more like hiccups in society, we see more issues in society, which demands more regulation. So we're in this very red tape environment with tons of administrator jobs and tons of public sector jobs that aren't necessarily offering value. In a free market, those jobs would not exist, because you would be, if you are earning capital, you're going to be very conscious about where you direct that capital. And if a job is not offering value, then why would you fund that job? Which is not the case when the government has a money printer. So I think the challenge that we face today is that, given that there is an entity that can debase the currency at the expense of others, we end up with an entity that slowly engulfs everything else. But it also slowly means that our productive capacity in society is diminishing. It's diminishing, because a lot of unproductive capital is going towards supporting jobs that aren't necessarily offering value.
I mean, yeah, I totally align with your view on this one, but I don't see it stopping. Like in Europe, we have a great example, which is the European Central Bank, which decided to come up with a CBDC, so the digital euro. And honestly, every time they speak about it, they got trolled. Everybody's like against it. If they make any survey about it from the population, they would vote against it. And on top of it, we have like a very integrated, because it's one with the euro and Europe. Like you can send instantly with traditional wire transfer euros with a system called SEPA. So for me as a European, I don't see why I would need a digital euro that would come. But they're like they print the money, they finance like these communication campaigns for the digital euro. They do these amazing events, presentations, big speeches. Everybody's agree with them, because everybody around them is government funded. So and they keep on growing and growing, and they spend the money on communication and explaining how important and the decision they're making. And I don't see it stopping. I don't see it at any time stopping. The government's going to keep growing, 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 and there's no end of it. Do you see any end?
I think that the challenge that which we face is the fact that when we live in a very left-leaning, interventionist, socialist kind of society where we want to try and support and intervene, we end up borrowing from the future. We take on debt. We end up having a massive welfare state. And on the face of it, it seems good. Well, we're supporting those that are struggling. But the reality is that ultimately, those that we're trying to support end up feeling the burden greatest, because we see a rising cost of living, rising house prices, you name it. And the challenge is that if we had to try and pivot to any other system right now, let's say we wanted to try and pivot to a more free market capitalist system, because we've borrowed from the future for so long, we've taken on so much debt, we're going to go through a major period of austerity, whereby now, because we've lived beyond our means, we now have to live within our means. And initially, people are going to see this as a failure of capitalism, a failure of the free market. But this is not anything to do with capitalism or the free market. It is simply because for decades we've been borrowing from the future. We've been living beyond our means. And so we're seeing this in, say, Argentina. We're seeing this in some countries globally now, where countries that have been very interventionistic for far too long and have been experiencing almost hyperinflation, the population are done. They're fed up, because they realize that the government keeps on promising all of this stimulus. The government keeps on promising change, but nothing is happening. Life only seems to be getting harder. The challenge at which we face is the fact that, let's take the US. 60% of people in the US live paycheck to paycheck. If we look at the UK, I think it's something like 52% of British citizens, what is it? 52% of British citizens pay less in taxes than they get in benefits. So what you realize is that the majority of people within a population are struggling to get by, which means you have a majority that will vote for anything that makes their life somewhat easier in the short term. So I would say that the hurdle we have to overcome is, right now, it doesn't matter if we're voting for the left or for the right, if we're voting for Labour or Conservative, Republican, Democrat. Everyone is incentivized to intervene. Because of our debt burden, we're incentivized to continually intervene. And so we're trending in this greater and greater debt, greater and greater intervention. And so until I think we separate money from state, we cannot remove that incentive. And so that's where I truly believe that the moment the government has control over the money, we will continually intervene. If we remove that power, then all of a sudden we flip the incentive. We flip the incentive whereby the government has to be a fiscally responsible entity. It has to compete on the free market and offer value. It has to balance its books because otherwise it's going to break down. And so I believe that in order to be able to move forward, you have to remove money from state. That's my personal belief.
Yeah, I mean, I like this comparison or this expression, separate money from state, because being Lebanese and coming from a country with 16 religions that are embedded in the state, we have a lot of problems that the West doesn't have because they separated the church from the state.
Mm-hmm.
And you can see through European history when this separation happened, it flourished an era of huge benefits. And at the beginning, they were like reluctant. And I also went and studied how come in the U.S. Constitution, the first article is the separation of the free choice of cult, and I went and tried to understand what was behind, like why is it the first most important article, the first one they wrote. And it was because of all the religious problems and wars and government church intervention and wars and killings that happened back then. So when they discovered the new land. So for me, like separating of money and state is the next stage to shrink the government and make it accountable for what they're doing. I mean, this is something that speaks to me on both hands, and I was glad to see it expressed in such a different way than my Lebanese experience, because I've lived in such a corrupt country, so people don't relate to it. They say, okay, it's a banana republic, so it's not the same here in Canada or in the US or in France or in Europe, but the way I see it, it's exactly the same.
Exactly the same.
Like it's not as corrupt, but it's not as efficient as it should be, and it shouldn't be running a deficit that will end up bankrupting the country like it happened in Lebanon, and that it's on the brink of happening in the Western world.
You know what? I would say that you make such good points. And when you talk about the corruption, I think the difference between, say, developing countries, somewhat developed, and developed countries is that many times the corruption, instead of being overt, is just covert. It all still goes along, it all still happens, but it's happening underneath the surface. And the challenge that I think we face, and I look at the market very much from a free market perspective, is that people are inherently self-interested. This is our evolutionary adaptation to be able to maximize survival. And I think that self-interest is what fuels the free market. But self-interest, when you have a centralized body that has control over a lot of people, that's when self-interest fails. In a free market, naturally, you can be self-interested and pursue something which interests you as an individual. But if it doesn't provide value to society, then capital is not going to flow towards you and you're going to have to pivot. But when you have a monetary system that is in conjunction with the state, ultimately you can have a few individuals that are self-interested and they can do things that is at the expense of the rest of the population. And the challenge I find, going back to kind of politicians, is that politicians have families to feed. Politicians have their own agenda. And so although, yes, they're trying to do their best, they're trying to support the individual, ultimately they still have to meet their own needs. And because of that, it's impossible to remove bias. It is impossible to remove self-interest, which is why I think we find ourselves in many of these holes that we find ourselves in, which is where if you remove money from state, you minimize the potential for the government slowly expanding. The only way the government can expand is if it's actually offering value. And if it's not offering value, it will slowly wither away, and another government who is able to support the needs of the populace will rise up. And that's where I think the free market leverages self-interest to our benefit, as opposed to leverages self-interest to the expense of others, which is what we see in a centralized system.
Okay, let's move to another topic, which is psychology. In your book, you address it. And I wanted to ask you about the psychological effects of money. And perhaps since we're touching on Bitcoin, I would go a step further about the religious effects around Bitcoin, because like when you become a Bitcoiner, and I am, and it's like a belief, it's not anymore about numbers and stuff. It's like a vision and a mission, to change the world and to spread the word around. Basically, how do you explain this part of money and Bitcoin from the psychological perspective?
So I briefly touched on how money impacts behavior. So we've obviously got time preference. When money is worth less over time, we're incentivized to think short term, meet these impulsive needs. When we have something like Bitcoin, it's fascinating because it inverts all of this. When you have a fixed supply and you have increasing demand because we're seeing adoption of Bitcoin, but at the same time, with a fixed supply, as we see increased productivity, increased efficiency, increased technological advancement globally, then naturally prices are going to fall in relation to Bitcoin. So Bitcoin's purchasing power is going to increase. So if all of a sudden our purchasing power is increasing into the future, we're now incentivized to save, which goes back to that whole point we were discussing at the start of this talk. If we're incentivized to save, there are immense benefits to this. Less capital flows towards unproductive zombie companies. And on top of that, we see less consumerism. Because if I'm going to spend less, well, naturally, when I do spend, I want to make sure I'm buying something of quality that actually meets my needs. So we're going to see a lot of these very destructive companies are simply just creating plastic garbage that's going into landfills, slowly wither away, and companies are going to compete to create better quality products. So less consumption, I think, is better for the environment. But then we also look at meaninglessness. When all of a sudden our purchasing power is increasing into the future, and we have an asset in which we're incentivized to save in, then naturally money is going to start to flow out of traditional asset classes and back into the currency. And what is interesting is you can see this happening simply because if you look at real estate has been going up over the last 100 years, something like 6 to 7% on annualized over the last 100 years. Equities has been going up around 8 to 9% over the last 100 years, and bonds around 5 to 6%. Well, if you look at technological advancement, prices should be falling between 5 to 15% per year, which if you take the middle ground, that's 10%. That means that if we have a currency with a fixed supply and prices are falling at 10%, all of a sudden, by simply saving in the currency, you're going to outperform equities, real estate, bonds. So we're going to see capital, immense amounts of capital. And I'm talking real estate. I think there's something like $300 trillion worth of real estate globally. There is in equities, there's about another 150 to 200 trillion. Bonds, another 250 to 300 trillion. The derivatives market is supposedly around $1 quadrillion worth of capital stored in these assets. And the only reason why they're in these assets is predominantly to escape debasement, to invest to try and outperform the debasing currency. So if all of a sudden we saw a large swath of that capital flood back into the currency because we're incentivized to save, people are going to be far better off because all of a sudden house prices are going to fall. It's going to be easier for the lower class. It's going to be easier for those trying to get on the property ladder and support their family. So all of a sudden that meaninglessness starts to kind of wash away because people have clarity around what the future may look like. And then finally, that compassion and altruism. If all of a sudden our purchasing power is increasing into the future because we're benefiting from society's ability to advance and technological innovation, then all of a sudden we're going to have more time to be able to look inwards and ask the questions, who am I and how do I want to show up? How do I want to give back to society? Because when we go back to that Maslow's hierarchy of needs, our base needs are being met. We can then start to think about giving back to society. We can start thinking about compassion, altruism. And so ultimately, what I think a monetary system that favors the individual, that separates money from state and has a fixed supply, the benefits are numerous because it flips all the incentives. It flips the incentives towards value creation. It flips the incentives towards collaboration. And I think one of the biggest ones, which I think is just profound for me, is that the challenge that we face in our current system, the fiat system, is that the government can fund war at the expense of currency holders. So we have these long wars that drag out for months, if not years, and we see tons of casualties, tons of economic distress because of it. And the system incentivizes fighting, it incentivizes war. When we have a system like Bitcoin, where you have a decentralized digital currency. And not only that, but you can take self custody yourself. And if you want, you can memorize 12 to 24 words in your head to take custody of that Bitcoin. All of a sudden, it flips the incentives. If the government cannot seize your asset because it's not physical in nature, and it's also not held by a third party, which is the case with real estate, it's the case with equities, it's the case with bonds, every other asset we have in society, all of a sudden you flip the incentive. The government can only fund war if it has support from the populace. And what that means is that wars are going to be a hell of a lot shorter, and there's hopefully going to be a hell of a lot less casualties. Because on top of that, if you cannot fund war at the expense of the currency holder, then you have to save up to be able to go into war. And if the moment you're in war and you start to realize, hey, we don't have the capital and resources to continue this effort, you're going to quickly back down. So I think that in a world that is built upon a sound money standard like Bitcoin, that is very hard to seize, it is digital in nature, and people can take custody of it themselves, all of a sudden we're going to see a massive shift in violence globally. It's going to be a hell of a lot harder for governments to be able to fund these never-ending wars. And so kind of back to that psychological component, Bitcoin ultimately, it's not just a money. It's not just this digital asset which is trying to help people escape the fiat system to be able to save a little bit. Ultimately, I think when you switch to a system like Bitcoin, where we start to use it globally, people can think less about money and they can think more about, how do I want to show up in this world? How do I want to look inwards? How do I want to better myself? And I think that is huge, because our current system is incentivizing us to take what we can, focus on the present moment, be very impulsive. It's not incentivizing collaboration and compassion.
Wow, I'm really moved by what you said, because these words speak very well in a concise manner about like exactly how I feel about Bitcoin and spreading the word around it. We're gonna have to wrap it up. Thanks a lot for joining, Seb, and it was really a pleasure having you on board. Perhaps a couple of words in conclusion about your other endeavor, Looking Glass, that you co-founded. Can you explain to our audience what is it about?
Yeah, so Looking Glass, I co-founded with a Greg Foss, who's another big Bitcoiner, and my business partner Daz B, and a couple others. And our whole goal with Looking Glass, we realized that there is incredible amounts of financial education and macroeconomic education, Bitcoin education, if people are in the financial realm already. That is very jargon heavy, and you have to have a base understanding to be able to kind of consume this information. So we felt we wanted to write content for the layperson, for the average individual, that removes a lot of that jargon. And so all of our content on our website, which is Looking Glass Education, you can find all of that content for free. And we have courses that dive into Bitcoin and macroeconomics. We have a lot of deep dives. And then on top of that, my business partner and I, Daz, wrote B is for Bitcoin, which is a book that basically just dives into just Bitcoin a little more holistically. And then I myself, which is what we've been discussing throughout this talk, wrote a book that was released in December, and I've been totally humbled by the response. But that book is The Hidden Cost of Money. And we basically discuss how money weaves its influence into all of these aspects of our society and how we show up as individuals and our own biology. And I think that it's really important for people to understand that money is more than just a medium of exchange. It is more than this thing we transact with. Ultimately, if our money doesn't meet the needs of the people, it's going to alter the society at which we live in and us as individuals very negatively. And I believe that we do have the potential to resolve a lot of the issues at which we face in society. And so if you want to check out that, you can find it on Amazon at just The Hidden Cost of Money. But yeah, I really appreciate you having me on, Jad. It's been such a great talk, and I really, really enjoyed your questions.
Okay, take care.